If you own a home in Canada and you are receiving CPP, OAS, or GIS right now, stop what you are doing and watch this video until the very end. The Canada Revenue Agency has issued important updates for 2026 that every homeowner needs to understand. These changes affect how much money you receive each month, what you owe in taxes, and whether you still qualify for the benefits you depend on. Thousands of Canadian seniors are already missing out on money they are entitled to, simply because they did not know about these changes. Do not let that be you. Stay with me. This video could save you hundreds, or even thousands, of dollars this year. Welcome to Mr. Jack, your trusted source for clear, honest, and up-to-date information about Canadian government benefits, retirement income, and financial updates that matter to you. Today, we are covering something that affects a very large number of Canadian seniors, particularly those who own their homes. In 2026, the Canada Revenue Agency has updated how it treats homeowners when calculating benefit eligibility and tax obligations linked to CPP OAS and the Guaranteed Income Supplement. These are not small changes. They carry real consequences for how much money lands in your bank account every month. Whether you are already retired or approaching retirement soon, this information is critical. So let us get right into it. Step by step, plain and simple. Let us start from the beginning. Why is the CRA specifically sending warnings to homeowners in 2026? The answer comes down to three key areas: the first home savings account rules, the principal residence exemption updates, and, most importantly for seniors, how property-related income and asset values are being factored into benefit calculations for programs like OAS and GIS. For many Canadian seniors, the home you live in is your most valuable asset. But what you may not know is that decisions you make about your home, renting out a room, using a home equity line of credit, or even selling your property, can trigger changes in your government benefit payments. The CRA has sharpened its focus on these situations in 2026, and homeowners need to be prepared. Now let us go through the most important updates one by one. The Canada Pension Plan continues to be one of the most important pillars of retirement income for Canadians. In 2026, there are several updates you need to know about. First, the CPP maximum monthly payment amount has been adjusted. As of January 2026, the maximum monthly CPP retirement pension for someone who begins collecting at age 65 has increased. These annual adjustments are tied to the average wage in Canada, and because wages have been rising, so has the CPP maximum. If you have not checked your current payment amount recently, it is worth doing so. Many seniors are receiving less than they are entitled to simply because they have not verified their statement of contributions in years. Second, the CPP enhancement that began rolling out in 2019 continues to mature in 2026. This means that Canadians who worked and contributed to the enhanced portion of CPP over the past several years are now beginning to see those larger contributions reflected in their retirement payments. If you worked any portion of the years between 2019 and 2025, you may be entitled to a higher payment than what previous estimates showed. Third, and this is very important for homeowners specifically, if you sold your home in 2025 and received a large one-time payment, that amount does not count as pensionable employment income. However, it does count as income for tax purposes in the year you received it, and that could push your income above certain thresholds. We will come back to this point when we talk about OAS clawbacks. One more thing to note about CPP. If you are currently receiving CPP but are still doing some part-time work from home, which many seniors do, the CRA is paying closer attention to self-employment income declarations in 2026. If you earn income from your home, such as renting a room or offering a home-based service, you may still be required to contribute to CPP depending on your age and the amount you earn. Make sure your accountant or tax preparer is aware of this. Old Age Security is the monthly payment that most Canadians aged 65 and older receive from the federal government. It is not based on your work history, which makes it especially important for those who spent years caring for a family or working in roles that did not contribute to CPP. In 2026, OAS payment amounts have been adjusted upward through quarterly indexation. The federal government ties OAS payments to the Consumer Price Index, meaning your payments are supposed to keep pace with inflation. The recent adjustments reflect the ongoing cost of living pressures that Canadians have been experiencing, particularly around housing, groceries, and utilities. For seniors aged 65 to 74, the current OAS monthly payment is in a specific range that has been updated as of January 2026. For those aged 75 and over, the federal government maintained the 10% increase that was introduced in 2022, meaning seniors in this age group continue to receive a meaningfully higher OAS amount. Now, here is the part that homeowners absolutely must pay attention to: the OAS recovery tax, often called the OAS clawback. If your net income for 2025, which was reported on your 2025 tax return, exceeded a specific threshold, the CRA will begin reducing your OAS payments in the July 2026 to June 2027 payment period. For 2026, that income threshold has been updated, and it is important that you know what that number is. The OAS clawback begins when your net income goes above approximately $90,997 for the 2026 calculation year, though this figure is indexed annually, so always verify the exact number with the CRA or your tax advisor. For every dollar of income above that threshold, your OAS payment is reduced by 15 cents. Why does this matter for homeowners? Because if you sold a property, received rental income, or withdrew funds from a registered retirement income fund in 2025, that income all counts toward your net income for clawback calculation purposes. Many seniors are caught off guard when their OAS is reduced or even eliminated the following year simply because of a one-time financial event related to their property. The key takeaway here is this: plan ahead. Before making major financial decisions related to your home, talk to a financial advisor or tax professional about how that decision will affect your OAS payments the following year. Prevention is far easier than dealing with a clawback after the fact. The Guaranteed Income Supplement is one of the most valuable and most underused benefits available to lower-income Canadian seniors. It is a monthly, non-taxable payment added on top of OAS for seniors who have a low annual income. In 2026, the GIS maximum monthly amounts have been updated. These amounts vary depending on your marital status and whether your spouse or common law partner also receives OAS. The federal government adjusts GIS payments quarterly in line with the CPI, just like OAS. To give you a general idea, a single senior receiving the full OAS pension and qualifying for the maximum GIS can receive a combined monthly amount that is significantly higher than OAS alone. For many low-income seniors, this combination forms the foundation of their monthly income. Now, here is the critical GIS warning for homeowners in 2026. GIS eligibility is determined based on your income from the previous tax year, and here is where homeowners run into trouble. If you have a home and you are renting out part of it, even just a basement suite or a single room, that rental income counts as income when the CRA assesses your GIS eligibility. This means that seniors who rely on a small rental income to help pay their bills could actually be disqualifying themselves from GIS or reducing their GIS payment without realizing it. Additionally, if you accessed your home equity through a reverse mortgage or home equity line of credit in the past year, you need to understand how that is classified. In most cases, loan proceeds are not considered income for GIS purposes, but interest earned on any proceeds that were invested could count. The distinction is important, and the CRA is watching these situations more carefully in 2026. Another thing to be aware of: if you received a one-time insurance payout, sold a second property, or received any kind of inheritance related to real estate in 2025, all of that needs to be reported correctly. Errors or omissions on your tax return can lead to overpayment of GIS, followed by a demand from the CRA to repay what you received. This is one of the most stressful situations a senior can face, and it is entirely avoidable with the right information. Let us now talk about the actual payment schedule for CPP, OAS, and GIS in 2026. Knowing when your money arrives helps you plan your monthly budget and avoid unnecessary stress. The CRA and Service Canada release these payments on a regular monthly schedule. As a general rule, CPP and OAS payments are deposited on the third to last business day of each month, though this can occasionally shift due to weekends and statutory holidays. For 2026, the general payment windows fall in late January, late February, late March, and so on throughout the year. If you have direct deposit set up, which is strongly recommended, Your money typically arrives in your account on the scheduled date with no delay. If you are still receiving checks by mail, allow additional time for postal delivery, and consider switching to direct deposit through your My Service Canada account to avoid any disruptions. If you ever notice that your payment is late, the first step is to check your My Service Canada account online. Many issues can be identified and resolved there without needing to call a 1-800 number and wait on hold. Now, I want to take a moment to walk you through some important alerts. These are the things you absolutely must not ignore in 2026. The CRA has made it very clear that it is increasing audits of principal residence exemption claims. When you sell a home in Canada, you are generally exempt from paying capital gains tax on the profit, but only if the property was your principal residence for every year you owned it. In recent years, the CRA has been cracking down on situations where people claimed the principal residence exemption without actually qualifying. In 2026, this scrutiny is even tighter. If you sold your home and claimed the principal residence exemption on your tax return, make sure you can support that claim. Keep records of your ownership, your time living in the property, and any relevant documentation. If you owned more than one property, you need professional advice on which property qualifies for the exemption. The federal government introduced a new Bare Trust reporting requirement that has caused significant confusion among homeowners, particularly seniors who may have added an adult child's name to their property title for estate planning purposes. If your home is held in any kind of trust arrangement, including informal ones, you may have additional tax reporting obligations in 2026. The rules around this have been changing, so consult a tax professional to confirm your situation. This one has nothing to do with the law, but it has everything to do with protecting your money. Every year, thousands of Canadian seniors receive phone calls, emails, or text messages from fraudsters pretending to be from the CRA. These scammers often tell you that you owe money, that your benefits are being suspended, or that you must act immediately to protect your account. Let me be absolutely clear. The real CRA will never demand immediate payment over the phone. The CRA will never ask you to pay with gift cards or cryptocurrency, and the CRA will never threaten you with arrest or legal action over the phone without first sending written correspondence. If you receive a suspicious call or message claiming to be from the CRA, do not engage. Hang up and call the CRA directly at their official number to verify whether there is genuinely an issue with your account. Your GIS eligibility is reassessed every year based on your tax return. This means that if you do not file your taxes on time, your GIS payments can be interrupted. The standard filing deadline for most Canadians is April 30th. If you are self-employed, including running a home-based business, your deadline is June 15th, but any taxes owed are still due by May. Even if you had very little income in 2025, you must still file your tax return to ensure uninterrupted GIS payments. Many seniors assume that because they owe no taxes, they do not need to file. That is a costly mistake. While the First Home Savings Account, or FHSA, is designed for first-time homebuyers, many of the seniors watching this video have adult children or grandchildren using this program. As a homeowner, you need to understand that the FHSA rules affect whether your family members qualify. Specifically, if an adult child is listed on the title of your home, even as a co-owner, they may not qualify as a first-time homebuyer for FHSA purposes. This could affect estate planning decisions you are making right now. Let us bring everything together now. In 2026, the CRA has put Canadian homeowners, and especially seniors who receive CPP, OAS, and GIS, firmly in its focus. The updates we covered today are real, they are significant, and they can directly affect your monthly income and your tax obligations. To summarize what you have learned today, the CPP maximum has increased in 2026, and the CPP enhancement is now more fully reflected in payments for those who contributed between 2019 and 2025. If you do any work from home, be aware of how CPP contributions apply to self-employment income. The OAS clawback threshold has been updated for 2026. If your 2025 income, including income from selling property or receiving rental payments, exceeded that threshold, your OAS payments from July 2026 onward may be reduced. Plan ahead and talk to a financial advisor before making big decisions about your home. The GIS continues to provide meaningful support to low-income seniors, but rental income from your home can affect your eligibility. Be careful, be honest on your tax return, and file on time every single year. The CRA is stepping up audits on principal residence claims, bare trust arrangements, and self-employment income related to homes. Make sure your records are in order. And finally, do not fall victim to CRA scams. Protect your personal information, and if in doubt, always call the official CRA number directly. These are the updates that matter to you. This is the information that keeps your benefits secure, your taxes accurate, and your financial life on stable ground. I know that dealing with the CRA and keeping track of government program changes can feel overwhelming. That is exactly why this channel exists. Mr. Jack is here to break down every update, every warning, and every change in plain language with no confusing jargon so that you always know where you stand. If this video helped you today, please take a moment to hit the like button. It helps more Canadians find this information when they need it most. And if you have not subscribed to Mr. Jack yet, please do so right now by clicking the subscribe button below. Turn on your notifications so that you never miss an important update. Every week, we cover new developments in CPP, OAS, GIS, tax changes, CRA alerts, and everything else that matters to Canadian seniors and retirees. This is a community built on trust, honesty, and making sure that you always have the information you need to make smart decisions about your future. Thank you so much for watching. I genuinely appreciate your time, and I will see you in the next video right here on MR Jack.